Hello, everybody. Good evening. Welcome to Officers Adda 247. Today, we will be talking about the target series for PPB examination. PPB is the subject which is one of the most important component of your JAB exam. It will be held in November 2025. And when we talk about this target series, we are very diligently picking most important topics from each unit for PPB, IFS, AFM as well as RBWM. Today we will be talking about module B, and in that unit number 30th, which states contracts of indemnity. Whenever you see this term indemnity, one thing must be very, very clear in your mind, that what is the meaning of indemnity. And when we talk about indemnity as such, where have you heard it mostly? In the insurance, right? Because insurance, you might have understood one concept there while reading the insurance concepts, insurance companies concepts in IFS also, that indemnity refers to something related to loss of a third party. If a particular, you can say, individual or a business unit, it is having certain kind of losses in the businesses, or for that matter personal loss, and if it has a coverage based on the insurance contract, then you can say that the indemnity is in play. And according to the Indian Contract Act 1875, what is the exact definition of indemnity contract? Let's see. So section 124 of the Indemnity Contract Act defines the contract of indemnity as a contract by which one party promises to save the other from loss caused to him by the conduct of the promiser himself or by the conduct of any other person. It is called as the contract of indemnity. And why we have taken the example of insurance? Because supposingly you are having a car insurance with you. Okay, the car is being insured by one insurance company, and you incur certain loss due to one accident. Fine, unfortunate accident happened and you incurred certain loss on the physical part of your car. Fine, the damages are physical damage. Now, since the car has been insured, a contract of indemnity has been signed by you as well as being pledged on your behalf by the insurer also. So you can directly fulfill whatever loss has been incurred. Why? Because you have entered into this indemnity contract. So when we talk about the unit number 1, where we have studied the various customer and banker relationship, there one term was indemnifier and indemnified. This type of relationship is also enjoyed by the customer and the banker. Between the customer and the banker, this type of situation or this type of relationship is also there. There also, we have seen that bank is the indemnified or the indemnity holder, and the customer will be the indemnifier. Bank will be providing these services. So whosoever is providing the service, that particular entity will be the indemnified or the indemnity holder, and the customer or the individual for which that service is performed will be known as the indemnifier. So contract by which one party promises to save the other from the loss caused to him by the conduct of promiser, that is the particular person, the customer himself, for any or for the conduct of any other person also is known as the contract of indemnity, that we have seen here as well. When we talk about the examples, so examples will be the transaction of issue of duplicate. In case of the bank, you will say that the transactions including the issue of duplicate demand draft, the DD, right? If supposedly you have issued, the bank has issued one demand draft to you, that is you are the customer. Don't assume yourself as a banker just for now. You are just a customer and the bank has issued one DD in your name. Now, supposedly you have lost that DD. Now, what will happen? The bank will provide you a duplicate DD in lieu of certain fees, certain service charge. Similarly, the FDR, the duplicate FDR, if you have lost the original FDR, the fixed deposit receipt, the bank will provide you the duplicate FDR, but in lieu of some fees. In these cases, the person availing the facility will compensate the other for any kind of loss arising from the wrong or the excess payment. Fine. So that's how the law of indemnity work also. Whosoever has incurred certain loss, here the bank has incurred certain loss, right? Because you have not you have not kept the particular FDR, or for that matter the DD receipt, very in a particular original format, and you have lost that. Now it is the duty of the bank, obviously, because they are providing the services to you, so they will provide a duplicate DD or the FDR. In the contract of indemnity, the promise is to compensate for any kind of loss incurred due to the action of the indemnifier or any other person. Fine. So the customer, as we were saying, it is known as the indemnifier, and the particular bank or particular insurer also who is performing the duty or providing the service to the customer is known as the indemnity holder or the indemnified. In case of the contract of guarantee, see, parallelly we will be understanding the difference also between the contract of indemnity and contract of guarantee. Why? Because sometimes we feel that contract of guarantee is more or less similar to the indemnity contract, but it is not. So here in contract of indemnity, the compensation for any kind of loss incurred will be done by the indemnified or the indemnity holder. Whereas in the contract of guarantee, the promise is to perform any obligation or pay for a liability in the case of default by the third party. So payment is at stake, not the entire asset. The contract of indemnity involves two parties only, that is the indemnifier and the indemnity holder, whereas the guarantee involves debtor, creditor, and the surety. Fine. So the perfect example or the difference via which you can easily understand the difference of contract of indemnity and guarantee contract is the car loan. Fine. In car loan, what happens? Sometimes we take a guarantor. Fine. So the primary holder of the account will the primary applicant of a particular account, that is of the car loan, will be there, and that particular primary applicant will be assured by the guarantor that yes, if you are not paying the money back to the bank, I will on your behalf repay whatever the amount is due. And this particular guarantor will be having a direct contract with the bank. Whereas in case of the contract of indemnity, what is happening? In case of contract of indemnity, only the bank and the customer directly are linked, or for that matter, for this car loan only, the same case. Let's just uh, utilize this particular example only. In case of car loan, you will have the insurance also. Fine. In insurance, you will find one is the insurer and the another one is the customer. So here the customer will be provided some services directly by the insurer without any third party involved. But in the guarantor case, or the case of you can say the contract of guarantee, you will find a third party involved. Okay. Now let's see the indemnity contract with one more example. Supposingly a contract is there wherein A contracts to indemnify B against the consequences of any proceedings which C may take against B in respect of a certain sum of rupees 200. So here there are three parties involved. One is A, then we have B also, and after that we also have C. So A has accomplished the contract to indemnify B. So this particular A will be the indemnity holder. Fine. Indemnity holder, and B will be what? The particular individual B, it will be known as the indemnified. Fine. Indemnified. Okay. Or the you can say indemnity holder. The oh sorry, let's just revisit this particular thing, and let me just rephrase this thing for you. Okay. There are three individuals, 1, 2, and 3. So in A, you will find that A contracts to indemnify B. So A has contracted to indemnify B against any consequences of any proceedings which a particular individual or entity C may take against B. So C is taking any task or any action against B. In this particular illustration, what will happen? The person giving the promise, fine, A is giving the promise, so that person will be the indemnifier. The person to whom the promise is being made, that is B, is known as indemnified or the indemnity holder. So in this particular case, B will be what? Indemnity holder. But when we were talking about the bank, see here, bank was the indemnity holder for this particular case. Fine. Because the particular bank is not at a, you can say, is not defaulting in paying the services or in providing the services, but the particular customer has defaulted on the basis of losing the FDR or the demand draft. But here we are talking about the another example more suited for the insurance contract. That's why it was the promise made by A will be termed as the indemnifier and B will be the indemnified or the indemnity holder. So whosoever is providing or giving the promise is known as the indemnifier, that yes, you provide me the duplicate FDR, I will be providing you with the required fee. And bank which is providing the services will be known as the indemnity holder. But when we talk about the insurance, for the insurance, B is the customer, and the customer will be known as the indemnity holder. Okay. Now, when I talk about the distinctive features of indemnity contract and the guarantee, you will find two things. First, the number of parties to the contract. Second, the contingent risk involved. Along with that, there are two more. That is, what is the nature of liability and what is the exact purpose of this contract, whichever you have, gone into the particular setup. So the number of parties to the contract, it defines two things. In a contract of indemnity, there are two parties only, the indemnifier and the indemnified. I hope now it is very, very clear to all of you that what is the difference between indemnifier and the indemnified, or for that matter, the indemnity holder. In a contract of guarantee, there are three parties, that is the debtor, creditor, and the surety. Surety is the person who provides the guarantee. When we talk about the guarantee, the contingent risk, in indemnity, the risk is contingent. Fine. You will be having a direct relation with a particular second party, first party, second party, but not the third party. In a guarantee, liability is subsisting. Fine. You cannot just say that if a particular person has defaulted, I won't be able to get my funds back. No, there is a guarantor involved. Nature of liability for the indemnity, indemnifier is required to make good the loss as soon as it occurs, whereas in the contract of guarantee, the surety's liability is secondary and the principal debtor is primarily liable. Okay, so liability lies with the guarantor in case of the contract of guarantee. Fine. Then we have the purpose of contract. The indemnity is for the reimbursement of a loss, whereas the guarantee is for the security of the creditor. Fine. So when we talk about the principal debtor is primary liable here in case of the guarantee, but the ultimate guarantee will also be applicable to the guarantor also in contract of guarantee. But here the purpose of contract, you will find that indemnity is for the reimbursement of a loss. Right? Some loss has occurred, and now you are providing certain service against that loss. On the other hand, on the contrary, when we talk about the particular security for the creditor, it is the only case for which we provide the guarantee. Fine. So the contract of guarantee will have just one thing, that it must provide the security to the creditor. Next, when I talk about the rights of indemnity holder, in this case, the indemnity holder will be having certain rights. And again, I'm reiterating this fact, the In case of banks, who will be the indemnity holder? The bank will be the indemnity holder. Fine. And in case of the insurance companies, fine. In case of insurance, who will be the indemnity holder? The customer. Fine. Okay. So all the damages which he may be compelled to pay in a, that is the particular right, that yes, I have paid premium for this particular insurance and I will be having all the damages covered, all the costs which he may be compelled to pay in any such suit, any cost which is involved there, all the sums which he may have paid under the terms of any compromise of any kind of such suit. So all these things will be paid by the insurer. Just keep one example in your mind, things will be more clearer. Then we have the factors affecting the claims of indemnity holder. What are the factors? Fine. Which will be responsible for affecting any kind of claim which the indemnity holder claims. So the damage, what is the type of damage, whether it is included in the insurance policy or not. The liability commences only when the indemnity holder actually incurs loss. Fine. It's not like that you are paying premium. So after 1 year or whatever time period is there for your insurance policy, you will be repaid the entire premium along with the rate of interest or along with the interest payment. No, nothing like that. Only if there is a damage or you have incurred any loss, then only you will be having the money. So costs, in case of costs, we have to, the cost paid to the solicitors, that is the lawyers who are involved, traveling expenses, and also the cost reasonably incurred in resisting or reducing or ascertaining the claim may be recovered. Various policies, you have a number of policies, they will be having these details. Then some paid on compromise. This is defined specifically in section 125. So as per the section 125, if the indemnity holder acts within the scope of his authority, then he is entitled to recover from the indemnifier all the sums that he may have paid pursuant to a compromise in a suit. So supposingly in this example of insurance only, the particular customer is not having any kind of support from the insurer at first place. So he has to pay some money. Fine. Now this person, let's suppose A, approaches the court. There, the settlement will be done in the favor of person A or the individual A, and whatever he or she has paid will be recovered by the court and adjusted in the account. Then what is the scope and application of indemnity contract? To the banks. So the customers of the bank who have lost any DD or a traveler's check are required to give an indemnity. So the customer will be providing the indemnity in case of bank before the issuance of a fresh instrument in return of the lost one. Indemnity bonds are also insisted by the bankers while issuing the FDRs, settling the death claim to the heirs, or while issuing the duplicate pay orders. That's it. Nothing else is required from the end of banks directly. One particular indemnity bond will be there. But nowadays, when we talk about the practical banking, indemnity bond is not there. But yes, one letter is being signed by the customer acknowledging that yes, the particular FDR or for that matter DD has been lost at my end. Okay, so this was it for this particular unit, that is unit number 30th, contract of indemnity. And when we talk about the comprehensive coverage of PPB examination or the PPB subject, along with the other three subjects as well for JAIIB, we have exclusively the JAB Mahapak 2.0, wherein you will find the recorded version of the live classes. Right? The live classes you can attend, recordings of that the live session you can easily watch n number of times. There is no restriction there. Then you will be having the access to the mock test, along with that the full length tests also, plus all the PDF from which we will be teaching you, that will be uploaded in your portal. Along with that, the crash course, which will be launching just before the examination, and the Power Pack revision batch as well. plus the e-books for each subject. You will be having access to that also. So one-stop solution, if you ask me, the particular JAIIB Mahapack 2.0 will serve it. And the 2.0 means 2x. That is, if you are paying for 6 months, the validity will be extended to 6 months. That is total 12 months. So this 6 months will be a complimentary offering from our end. If you are paying for 12 months, you will get additional 12 months. That is 24 months in effect. Effectively, you will be having the access to the entire package. Okay, so this was it for today's lecture. I hope that you will be able to solve all the questions based on unit number 30th. In case of maximum discounts, you can directly apply the coupon code, that is Y1003, in case you are making any purchase. So see you in the next video. Till then, goodbye everybody. Take care.